This whole Bitcoin halving narrative, I spent a long time looking at it, and I think it's factually incorrect. Chris, fantastic to get you on Real Vision. You've been on before, right?
I was on talking about valuation, I think, in the last bear market sometime.
Fantastic. Can you just introduce yourself, what you do, and how your path, how you got here? You know, what was your crypto journey as well? Because I just find it fascinating always how people jumped into this.
Yeah, definitely. Well, when I was in college, I was studying marine sciences. It was called Ocean Systems at the university I was at. And around that time, I also came across the Silk Road. This was 2012, 2013. And I found the Silk Road to be a radical experiment. And it was more intriguing to me, actually, than Bitcoin itself. Bitcoin was just a tool that facilitated it. But it did cause me to learn a bit about Bitcoin. A couple years after that, I joined a small startup by the name of ARK Invest before they had any ETFs live. And I worked for Cathie Wood for 3 years thereafter. So that was 2014 to 2017. And towards the end of 2014, we started a deep dive into Bitcoin. Cryptocurrency had been one of the elements within the next generation internet theme overall, which would become the ARKW ETF. And Grayscale approached us and said, hey, we think you guys can put the Bitcoin Investment Trust in some of your ETFs. And we didn't have direct Bitcoin exposure at the time. We had like NVIDIA for a variety of reasons, because the GPUs, Taiwan Semiconductor, because some of their fabs were producing ASICs, but no direct cryptocurrency exposure. It was too early. And ultimately, in late 2015, ARK did put GBTC into 2 of its ETFs, became the first public fund manager to give its clients direct Bitcoin exposure. And that was right around when Bitcoin was at 200. And I think the next month or 2 months later, in November of 2015, Bitcoin quickly doubled from 200 to 400. And then it was a media darling again. And a right place, right time kind of thing, right? And then things just kept going from there. Ended up meeting Jack Tater, who proposed co-authoring a book together, which we did when we got the McGraw-Hill book deal. And then around that time...
What's the book called?
It's called Crypto Assets. Yeah, thank you. That's very savvy of you. Crypto Assets, the Innovative Investor's Guide to Bitcoin and Beyond. I've lost my PR training, Raoul, since I'm
we don't need PR training. This is Real Vision.
But yeah, and so wrote that book that was published in the middle of the bear market of 2017, and it was really the first book that went beyond Bitcoin, right, and discussed quote unquote alts and evaluation methodology to approach the whole asset class of crypto. And around that time, I was also founding Placeholder with my partner, Joel Monegro, and assisted by Brad Burnham, who was and is the co-founder of Union Square Ventures. And so, now here we are, 17, 18, 19, 20, 21, 22, 23, I guess 7 years later, and Placeholder's chugging along and things are going great. And I'm starting to feel like a seasoned veteran, I guess.
And at Placeholder, what are you doing? You're doing both privates and liquid?
Correct. I would say in capital, we're pretty evenly balanced between public and privates, but we are known as a venture capital firm, and we do support teams in that capacity. Our view is even in the public markets, when we're buying in distressed situations, a lot of times you're encountering the same types of issues you would with a startup, and you get venture scale returns if you do it right. Even in the public market, you do have the benefit of liquidity. So in capital, we're evenly split. In number, I would say we do about twice as many venture deals as public market positions. So that just means our public market positions are twice the size of our average venture deal.
Hey everyone, Raoul's Venture Crypto, it's really my flagship show. It's where I interview the best guests in the world, people you never get on another show. I think it's the best show in macro, crypto, and Web3 combined. In fact, that's what it does. It covers everything. But really, it's all about the revolution in Web3 and crypto. And I'd love it if you got it every week in your inbox. All you have to do is just click on the link below, pop in your email address, and you'll get notified every time it comes out. And you don't miss anything as you take my journey into the exciting new world of crypto and Web3. Thanks. So talk to me a bit about your valuation framework, and then we'll start digging into where we are today. How do you think about valuation in this space? Because different people have had different perspectives. I've used Metcalfe's law and some sort of methodology around that. How have you thought about it, and how's it evolved?
Oh, wow. This is a big one. I would say I was more focused on valuation methodologies in 2017, 18. And the reason I say that is I think valuation methodologies are most useful in crypto in bear markets for setting the price floor. And then it's really market structure and flow dynamics that are going to determine your end state prices at the top of a bull. So like, and then it really depends on the asset, right? So if you look at Bitcoin, I think price floor, it's a commodity, right? Commodity is the price floor tends to be the cost of production, and it's an unusual commodity, admittedly, right? In that, like, if miners keep going offline, then the cost of production will keep dropping, and I think that is a wrinkle within using that commodity cost of production framework to value Bitcoin at the bottom of bear markets. But I combine that, I would say, with because Bitcoin is so psychological as a store of value, with things like MVRV, so market value divided by realized value, where when you drop beneath that, you're starting to get into a situation where the holder base is beneath its cost. And when that happens, the Bitcoin holder base is so committed. I just saw, I think, a tweet that the amount of Bitcoin that is on exchanges is less than the amount of Bitcoin that has been dormant for 10 years, right? And so that's an extremely committed HODL base, let's call it. And so, looking at the psychologies through numbers of the HODL base for Bitcoin, I think is really useful for, those bear market bottoms. And then, there's an array of technicals of which you're more an expert than I am, but the 200-week has historically been reliable. That has been broken this bear market, but it's I think we're toying with it now when I look at the charts.
Yeah, it feels like it's contextually right. I don't look for perfection. You just look for things that are contextually right, and if you can tick a load of boxes, you're kind of probably in the right ballpark.
Exactly. Yeah, and that's a mistake that I think I see a lot of people online making is they're always finding these exceptions, and it's like, well, it broke this rule, and so like it can't possibly be the bottom or the top. And it's like, yeah, but the other 10 indicators are all like flashing as they should be. So I totally agree. It's a confluence of methodologies that inform those bottoms and tops. So that's Bitcoin. That really sets the stage for the rest of crypto. The proof of stake based assets are trickier because if you try and value them based on their value flows, they're recursive, right? Because you're getting value in the stake-based asset, and then the stake-based asset is fluctuating in US dollar price. I think a cleaner way to go about it is just looking at yields. And the higher risk the network, the higher the yield should be. And
do you use real yield, or I adjusted for inflation on the protocol, or do you just keep it just basic?
So, I would look at it from both. I think that like ETH is the only one that has real yield, right? And the others are all right now subsidized yield through inflation. Now, I think that all these protocols are going to have a choice to make of will their base just tolerate low amounts of inflation, right, to subsidize the work of the validators, or are they going to get to a place where the transactional demand for block space actually makes it a quote unquote profitable protocol like we see with ETH. And so, but it's a great question because we need standardization, right? And so like, I think that there should be, for example, on the increasing number of valuation methodology websites such as Token Terminal, there should be real yield as one metric, and then the other forms of yield.
Because I've just thought about this, and you've probably seen me talk about this, is I think the whole space should be benchmarked against ETH, like all credit markets are benchmarked against treasuries.
Yeah.
And so you should be able to see, as you suggest, hey, Solana has a higher yield because there's perceived to be either more price risk or more volatility risk or whatever, or adoption risk.
Yep.
And we can do like ETH plus 300 basis points, and that would be so much easier.
And I mean, if you're thinking that way, then I bet a bunch of institutions are thinking that way. And, as the makeup of who is in crypto changes, so are the norms. So I could totally see an ETH plus type of situation. And, one of the arguments I've been putting forth is that ETH is risk minimized yield for the internet, just as the 10-year is risk minimized yield, for the physical space. And so I think that everything will be benchmarked against ETH so long as ETH maintains its dominance, and I don't see a reason why it wouldn't. And so that's stake-based assets, right? That would be, say, one pretty simple valuation approach. And I'm sure people are going to get more sophisticated over time with it. I think the frustrating truth as someone who approached the whole crypto space very much as a scientist, and that's how I was trained, is, if you get too lost in, say, some of the valuation methodologies, you'll miss some of the larger moves, and you'll actually take yourself out of the market. And so this is where I think of, the bell curve IQ chart and, working with both the left side of the curve and the right side of the curve.
I totally agree, because look, in an adoption market where every participant has a stake in the adoption, right? Unlike a mobile phone network, we all have a stake in, ETH or Bitcoin, Solana, whatever it is. And therefore narrative becomes really king. So you need to see narrative plus some adoption measures, and you kind of have to put your finger in the air and says it feels about right. It's like you and I both got quite bullish on Solana when it collapsed, because you look at it and think,
it's sub $10. It was beneath Uniswap.
Yeah, and when you look at it, it was like, well, I can see the number of developers, I can see the activity, I can see the team, and the price doesn't reflect it, and it just feels like ETH 2018 all over again. For sure.
And I also think that, another way to approach the whole crypto market is much more psychologically and looking at how things are tethered to each other. So, you could start with Bitcoin, or you could start with macro, and then from macro you get to Bitcoin. And then Bitcoin is, right now the flag bearer of what is possible for evaluation of a crypto network. Yes, it's proof of work. Most of the others are something different, but just on the left side of the bell curve, you have a Bitcoin valuation. Then you have an ETH BTC ratio, which is ETH relative to Bitcoin, right? And I think people want to see parity there.
I love that chart, by the way. It looks like it's going to explode. But
it looks great, right? And so then you have the ETH BTC chart. Then you have the Sol ETH chart, right? And that's its own competition. And so everything is interconnected in markets. And, so that's one way to look at things. And so it's like, okay, if BTC hit, or went through $1 trillion last cycle, could it go to 2 to 3 trillion next cycle? Probably. Does that mean that ETH could also go to 2 to 3 trillion? Potentially. I think ETH 20K is 2.4 trillion roughly. And so then you've got some type of ETH BTC parity. And then, you look at, say, the dominance chart of BTC over time, and you say, okay, if BTC dominance is declining in the midst of all this, and let's say BTC plus ETH together make up 50-60% of the ecosystem, then that leaves another room for 2 to 4 trillion of value in the rest of crypto, and voila, you have a $10 trillion total network value of crypto, which I would expect us to see at some point this decade, right? So that would be like another relatively back to the
I
envelope
love doing
exercise.
those broad-based sense checks. They just, because in the end we don't know the path, but something like that broadly makes sense. And if you look at the increase in adoption in terms of number of active wallets, you can back out to roughly the same numbers.
Yeah.
Also, what I found was really interesting is I did a lot of this work on this, trying to find an approximation for Metcalfe's law. And there's a great guy at Bloomberg who's kind of taken it up and working on it now, Jamie Coots. But what I basically found, bizarrely, is price is pretty accurate.
Mm-hmm.
Yeah, you get some deviation, but the markets seem quite efficient, which means that, yeah, technical analysis is actually pretty useful if price is pretty efficient. So it's kind of, you know, it's
That is
not as
interesting.
inefficient a market. You'll find inefficient stuff when you're looking at smaller stuff, but at a broad base, it's roughly right.
I remember seeing what you circulated, which was basically ETH is on the exact same path as BTC when you look at it from Metcalfe's law. And yeah, that was fascinating. And then
because its adoption curve is faster, as you said, Bitcoin might get to 2.4 trillion, but ETH will get there as well. It's kind of, it's exactly backing up your kind of thesis, which looks the same as the ETH Bitcoin cross chart as well. It's like, that looks like it's going to triple or quadruple from here. So therefore, it all stacks up roughly.
What do you think of the Sol ETH chart then?
Super bullish on that one. If that breaks here, it's still messing around, but if it breaks that level, it just feels to me that it's, Solana will outperform ETH, will outperform Bitcoin, and something else will outperform Solana, but it becomes harder for me. I just don't have the ability to figure out what that will be, you know, because we've got new stuff like Sui and we've got other stuff coming up, you know, I don't know, but those three charts are really interesting to me.
Yeah, they are. For me, they're like crypto native macro charts. And so, you know, there's all kind of those more idiosyncratic things to crypto. The other thing I think about a lot is the amount of time that this market is open. I ran the math at some point, and it's more, you know, the crypto markets are open more than 5x the amount of time than the traditional markets. So if you think about like an information processing machine, they're a much more active always on information processing machine. The other thing is, this is the first time the world has been able to bid or sell an asset around the clock. And
the same asset,
right. And so they're everyone's in the same markets, and it's not, you know, a pink slip. It's not, you know, there's no say, you know, weird access points for different geographies. Everyone's in the same pool. And you can watch and be like, okay, US is going offline. Asia's coming online. Okay, Europe's coming online. Okay, Asia's going offline. And you see how different parts of the world are reacting. And I do it mostly for Bitcoin, but it shows up in other assets as well. And I don't think that people fully grok how powerful that is. But I think it's part of what makes crypto so intensely boom bust. Because we're all moving as a herd together, you know, and at 5 times the speed, say, of what you would be able to find in traditional markets.
And I looked at this boom bust thing, and we kind of tweeted at each other, and I still owe you some charts, okay, we've got the adoption curve, which goes up over time, right? And you lose the log chart, and, you know, we're all familiar with that pattern. But this whole Bitcoin halving narrative, I spent a long time looking at it, and I think it's factually incorrect.
Interesting.
It is actually the business cycle, which is quite extraordinary, and it's best represented by M2. So global M2 year on year is the same as Bitcoin year on year, basically, except Bitcoin overshoots on the upside, so it comes off the scale because it's an exponential adoption asset. It's got Metcalfe's law to it. So what you find is in the bull markets, it outperforms where M2 should be. In the bear markets, it exactly follows it. And so then I thought, what's going on here? And I just wrote a thesis on this because I just suddenly figured it out. I got on my Bloomberg a chart of the ISM survey. And I'm like, I've been looking at this for 30 years. I'm like, it looks really cyclical now. I mean, like clockwork cyclical. So on Bloomberg, you got this cycles finder. So I put it on, and every top is exactly 3.5 years. I'm like, and all the bottoms match. Every top is every time Bitcoin tops.
Mm-hmm.
I'm like, and then I started doing the work and I realized what I think has happened is the global business cycle is just a refi cycle because everybody in the world reset their rates at zero in 2009.
Mm-hmm.
And most debt is between 3 and 5 years. So you get this 3.5 year cycle,
Right.
which is a refi cycle. So right now, the problem is if we got rates at bloody 5%, there's not enough money to cover it, so the economy slows down, etc. So it feels that Bitcoin, all the crypto market, is liquidity flow plus adoption.
Mm-hmm.
And once I discovered that, it just so happens that Bitcoin was launched at exactly the same time as zero rates.
Mm-hmm.
So it's coincidental that the Bitcoin halving, because, I looked at this for a long time and, talked to Plan B about this. And I'm like, direction, it seems fine. I don't have a problem with it and it doesn't have to be perfect. But it's like, but where's the demand side of that equation? Because it's only a supply story. And every time I look at people in commodity markets who just use supply, which is a lot of people, they always fuck it up because demand is actually the more important equation.
That's really interesting. I can see it. And I think that, you've caught my eye with some of the liquidity arguments, and I'm trying to do a better job of tracking global liquidity. Because I think
there's no easy place. I mean, I can get it on Bloomberg and my macro analyst puts it together. I'll see if I can figure out an easier place for it or if there's a proxy for it.
Mm-hmm.
Because US M2 alone doesn't work. It has to be global M2.
Right. Because right now we have China injecting liquidity into the markets,
exactly,
which is a big deal. And so I definitely think that's valid. I think that the Bitcoin halving narrative is baked into the cultural fabric enough that it will probably continue.
That's true.
And that's fine. It can be used to tell the supply side of the story, and liquidity can tell the demand side.
And how do you approach the DeFi space? This is the space I find the hardest because the adoption is actually very small because it's almost unusable for a normal human being. But it's interesting. There's a lot going on, whether it's Uniswap or whether it's Aave or whatever. There's a bunch of these that are really interesting. How do you approach that space, or do you not at all?
Well, it's been a journey. So we seeded some teams in 2018 and 19 that became blue chips like Balancer or UMA. And we made some public market investments in teams like Maker, for example, or Nexus Mutual. And by and large, those did very well for us. But I do feel, and some people are going to really not like me saying this, but I do feel that DeFi is still in its V1 stage. And there's really awesome innovation and there's indications of what can be there. But I think we will look back on a lot of DeFi as we know it today to be, I don't want to use an insulting word here, but, more proofs of concept that grew up over time. And we've been speaking with a team called Infinity Exchange, and they've been blowing my mind, I would say. The leader of it is this guy, Kevin Lepso, who was head of structuring at Morgan Stanley from 2006 to 2011. So through the financial crisis, through max complexity, and he gets DeFi and the importance of, say, the transparency, the assets being on chain, but he also, looks at a lot of the inefficiencies. Let's say if you look at the spread between borrow lend on Aave, it's like, I think I was just looking at ETH the other day. I think it's 4% to borrow and 2% to lend. So you got a 200 basis point spread. And it's kind of like being able to buy Bitcoin at 40K and sell it at 20K. Those spreads are never going to work for institutions or power players. And that's just one example. I think that, the spreads are much tighter in exchange. But, one of the things here is, and this is from the conversations with Kevin from who I've been learning a lot. So crypto right now, they're more equity-like instruments than they are bond-like instruments, and the bond markets are much bigger than the equity markets, and because of that, we don't have yield curves really in crypto. We don't have continuous yield curves. There's a team we work with called Element that is working on parts of this. There are people who are working on parts of this.
And the Shanghai fork is going to help on ETH.
Yeah, that'll help, and you're seeing signs of people playing with the idea of yield more, and not degenerate yield, but real yield, as you point out. But we need much better borrow-lend markets. 2022 taught us that, and even the DeFi primitives that survived, and that's great. The spreads are way too wide. Those need to tighten. I would say that stablecoin yields need to achieve close to parity with the yields we see in traditional finance. Maybe an extra 10, 20 basis points or whatever you want to apply to idiosyncratic crypto risk. But those yields need to come together. Also, custodying real world assets and generating stablecoins against those is another thing that we don't really have to start to really grow the crypto pool. So, but those are kind of more red tape, stodgy, quote unquote, boring institutional things that requires a different type of founder, I would say. And so I think that we will see more of this hybrid or institutional DeFi come in, built more by, say, combinations of teams that came from Wall Street or traditional finance with strong coders who speak the language of traditional finance. Because traditional finance, there's some experimenters like Jump or whatever, but most of them, they just can't get over the line on too many things with DeFi as it currently exists.
So what's super interesting is Alan Howard's a good friend of mine, Brevin Howard Digital. They're huge now as a hedge fund. And what he did is he moved his money market and emerging market traders to run the DeFi books. Because he said they completely understand it and they understand how to arbitrage it and all of that. But, I've got this crypto fund of hedge funds called Exponential Age Asset Management. And what we found is basically at this current market, there's probably about $4 billion in hedge funds, maybe 5 in liquid market strategies. I mean, there's no money, 3 trillion in traditional markets in hedge funds. So what you've got is that tier of people creating liquidity, just not there. So there's a few guys like you who are doing, mainly directional stuff. So we got Polychain and a few others. There's not that many arbitrage funds yet that will tighten up all of these spreads and make all of these system things, the relationships between different crypto assets and stuff. It's just not there. There's no capital. Yeah, I think it will come. I think the capital will come, and the next wave will see a lot more hedge funds into the space that will start arbitraging spreads and make it more liquid for other people to use and more robust and stable, I think.
I agree with that. And again, this is pulling from conversations with Kevin, but some of it is there aren't good ways to hedge out duration risk, and without, really robust yield curves and borrow lend markets with tight spreads, there's too much risk, I would say, for an arbitrager to come in and do their job while hedging out the exposures they don't want. So there are some, I would say, fundamental pieces of infrastructure that still need to come into play that are probably going to be built in more hybrid DeFi environments that will allow power players who truly operate at scale to come in and do their work.
Yeah, my view on this has been ETH staking yield was step 1, but that was 1 year yield. And then you had to take illiquidity risk by taking Lido or somebody else, and it's a mismatch, a duration mismatch, which is always a problem, right? Because it can go horribly wrong. But after the Shanghai fork, basically anything out to 1 year is now liquid. So now we can have a money market curve at least. So we can have a 3-month rate of money, a 6-month rate of money, a 1 year rate of money, an overnight rate, all of that. That's going to help a lot. Okay, it doesn't give us an option market that goes beyond a year yet. You can, but you've got a lot of risk, as you point out. I think this is a big deal. And then somebody will set a longer term benchmark duration yield at some point. But it's probably still too new as an asset to have that. But it feels like it's interesting. And my guess is it will price somewhere like the Treasury curve, because all money is fungible in the end. You know, there's some relative fungibility between, you know, a US Treasury and ETH. So I think that's how it'll end up.
That makes sense. And I mean, the last bull market, I would say, was crypto playing with this idea with fire. You know,
because it's manufactured yield. That was the problem.
And so it was, you know, it was us more in our juvenile state, you know, with hairspray and lighters and, you know, just torching everything and taking things to excess. And I think that, or at least my hope is that the next expansion is a more mature and refined approach to these really important components of finance.
So you got very interested around the lows from that June to October period as crypto was basing. What got you more focused over that period? And then we'll come into Solana, because I thought that was very interesting. But what got you focused? Because, you know, you've been through a cycle before. There's a lot of people who haven't. You kind of know how it plays out. And you remember it, and your tweets were quite funny because it's just reminding people of what they were like back then, and it was exactly the same mentality.
Yeah.
All going to shit.
It never changes. I mean, when I really started paying attention to crypto, it was in the 2014-15 bear for Bitcoin. And then that's when ETH was launched. And so from that bear to the 18-19 bear to the 22-23 bear, there's just certain patterns that pop up a bunch. And there's the psychological ones of, and this is where Twitter's a really powerful tool, but, you know, when a asset is really low and people are calling for zero in the case of Sol, or, you know, 10, 12K in the case of BTC, and not honoring the fact that it's showing some strength, you know, that's an indicator to me. The hysteria, I mean, the amount of rumors that were circulating, especially after FTX went under, you know, basically everyone was judged to be insolvent at that time.
Insolvent or a scammer or a fraud, or it was incredible. Yeah.
And so that was basically the same behavior as the 2021 top, but just inverse. And so those types of things socially made me interested. And then some of it is going back to our valuation conversation of if I have rough price targets for certain assets that are on my shopping list, once they've dropped sufficiently, typically once they're down 75, 80%, I'm starting to get interested. Because even just like, here's a rough heuristic. You know, if you look at BTC, you know, in 2017, it hit 20K. In 21, it hit 60, 70K. So it went about 3x, right? All-time high to all-time high. ETH, 1,500 in 2017, 4,500, 5K in 2021. Again, 3x. And you can find different examples of this. Typically, the breakout cycle or the like I'm here cycle is, you know, the 100 or 1,000x or, you know, the crazy thing. But once something's at sufficient scale, let's just say, okay, 3x high to high is, you know, what you could expect if it's going to have continued success. Well, then once something's down 80%, that means it's a 5x back to the prior high. And then it's a 3x from there to the next high. So then it's a 15x. And so then at that point, you know, I'm getting pretty interested. And then if it's down 90%, well, then it's a 10x back to the high and 3x to the next high. So then it's maybe a 30x. And so that's how my mind works. And you know, I never try and time anything perfectly. tranche in. I learned from Kathy that once you have conviction in an asset, you just keep buying it. It doesn't matter how low it goes. It doesn't matter how sick you feel. The sicker you feel, the more you should buy. And looking back at our behavior in 2018 and 19, the assets that were bought near the bear market bottom, you look at the units that you accumulated for certain dollar amounts, and it blows you away. You're like, oh my God, like I needed to buy more there. And so that, I would say the back half of last year is when I was having that experience.
Yeah, I was the same. Any penny I could find, I was trying to take. The other thing I learned was, having been in Bitcoin since 2013, is ridden the cycle up and down. So taken the joys and the pain.
Yeah.
And then rode it all the way back up in 2017. Got out too early into the mayhem when it was at 2000. I was up 10x and I thought I was a god. Then it went up another 10x. Then it collapsed. And then I bought it back, I thought brilliantly, in April 2020. But I'd sold out at 2000. I bought back at 6,500. I'm like, you fucking moron. Why don't you just keep it and buy more in the low? And I would have done a lot better. I went, did the whole maths and how much better I would have done, even though I traded it really well, theoretically. I'd have done 5x better just by holding it. And if I'd doubled my position, my original stake at the low, I would have been something like 15 or 20 times more than I made. I'm like, okay. So I've used that framework. It's like, okay, fine, just find whatever liquidity you can when it does this.
Yeah.
And you tend to get the higher expected future returns. I discovered this exact same thesis that you had. It was after the European crisis and 2008. So 2008, European crisis, 2012, there was whole European economies that their stock markets were down between 75 and 90%. So you need to make one choice: is this entire stock market going to go to zero? Because over time, people, anybody, the troll on Twitter will, well, it can go down 50% again. We just size it accordingly, right?
Yeah.
But the expected future return is astronomical. And I just called it the bombed out market strategy. And it works brilliantly well in crypto because it's so cyclical.
It does. Yeah. Well, and I think that your story is a good lesson for a lot of people of, and I do this personally, where I don't, I'll never sell all my Bitcoin.
I've not sold anything.
Yeah. There's a position that stays long, and then there's a trim position. But maintaining exposure, at least for me, it just keeps me calmer. If I were to sell, all the crypto exposure I have, I would kind of feel naked, or I wouldn't be able to, just look at things as logically. And I think I would feel jumpier. And so, again, I look at crypto Twitter and I think people are obsessed with perfection and, these people who claim to make all this money and, they try and replicate a false dream, or a false idol. And I think it's, better to stay long and, accumulate, as you're pointing out, what you can when the opportunity arises. Cause
and also I notice, when you step back, and I keep trying to get people to think this, it's a long-term adoption curve, and we only just started. We're at 300 million people, and we will get to 3 billion people over time. So you need to think of things as a long duration asset, and you just size it accordingly. Now, depending how much risk you want to take, and that's it. But people get so obsessed. I mean, yes, I look at hourly charts next to me on my Bloomberg of ETH and everything else. I don't trade at all. I never buy it, never sell it. Occasionally I'll make a switch. So if the Sol ETH chart really breaks and I got some conviction, I'll switch some of my ETH into Sol. That's all I ever do.
Right.
I don't even trade it, even though I've got hourly charts and I'm watching it like a crack addict for no reason.
Well, it's entertaining and it's information.
It is.
And if you enjoy doing it, why not? No, I agree. Well, so I've got a question for you then. Do you think about terminal value for BTC?
No.
Okay.
I think what we'll see, because of adoption curves and how they always play out, is a decreasing rate of change.
Yeah.
And what you'll end up doing is naturally switching into another asset if you're driven by performance. There's a whole bunch of Bitcoin maxis who aren't. They're driven by idealism, and that's fine. But for me, it's about, why did I make the switch from Bitcoin into ETH? It was just that the ETH adoption curve for such a large asset was so much faster. So I think what will happen is these curves come down over time. And so I don't know what that terminal value is. And what is this? I don't think of some golden state of heaven where we suddenly come and the birds are chirping and we've reached this state.
Right.
Basically speaking, we'll all be okay if it goes up from here. Another couple of cycles with this 3x versus the previous high, everyone will be just fine. You don't need to be the richest person in the world. You can still be surfing in Hawaii or scuba diving in the Cayman Islands and not have to focus on all of it. So that's kind of how I think about it. But everybody always wants a target. In the back of my mind, when I first started this, I wrote the first ever macro strategy piece on Bitcoin. And I just compared above ground supply of gold and known reserves and just backed it into Bitcoin and said, roughly speaking, with gold at, I think it was about $1,300 at the time, I said, equivalence basis, Bitcoin's worth $1 million. And I've always stuck with that as that's probably the kind of, right kind of target.
Yeah. Well, that, and I think that aligns with Kathy's thinking as well. It's an interesting one because I look at BTC. Well, so like if BTC is chasing gold and ETH is chasing treasuries, then the treasury market is bigger.
I totally agree.
If you look at total value,
there's no way a non-network outside of one thing. So it's a terrible narrative, but it is like a digital gold. It's a fixed asset that does one thing. Right now, yes, we've got these ordinals and a few other things, but I just don't see that really getting traction. So that is not the same network. If you think of Metcalfe's law, it's not only the number of connections on the network, but the interconnected between them, i.e. everything you build on top.
Right.
And ETH has that written large everywhere.
Right.
So there is almost in no world, if that continues, the Bitcoin stays as is, the Bitcoin Maximus perfect thing, it can't be as big as ETH, just mathematically impossible. And that's okay. But people they worry about that like it's some war. It's not. Just have an abundance mindset and everybody's fine.
Yeah. Well, ETH is definitely the network of networks. And then you have S curves on top of the ETH network itself that are growing and pushing then the value of ETH itself.
Yeah, I mean, look at Matic, right? Matic's a perfect example. I'm actually going to write a piece on this. I've been working with Kevin Kelly from Delphi. I think of ETH as almost a perfect representation of an economy. Like you said, we haven't fully got the yield curve longer dated, and I'm thinking of things like Polygon as being companies built on the economy. So they're using the facilities of being in the United States, like Google did, but it's built on top of that infrastructure, and it's net accretive to the economy, which is ETH. And it's a company on top, so you can have different growth rates and all that. There's something in this. I need to figure it all out.
Well, to take the analogy even further, if you say that ETH is a digital nation state, then Polygon is a jurisdiction within that nation state, and then there are companies built within that jurisdiction.
It could be. It's something like that.
Yeah.
Or it's a company like Google, of which we built businesses on. Like, we're both using Chrome browsers now. So it's all this interconnectedness. The staking is the treasury market and the Fed funds rate and all of that stuff. DeFi is bank financing and lending. NFTs are assets. So that's property, art, all the other things that occur in the US economy. Because I realized this, I had this breakthrough. I was in my house in Little Cayman, and I was remembering I've made two really big calls in my life where I've kind of gone irresponsibly all in. And one was 2012-13. I was in Spain and I was writing Global Macro Investor, charging everybody in euros and living in euros. And I just thought the euro was like 148 or 145, something like that. And I thought, I think over time, because of the structural problems in Europe, the euro is going to fall. So I switched all of my savings into dollars. And then I thought, well, where am I going to hold this and how am I going to do it? I was worried about European banks. I changed the billing of global macro investors, so my entire income to dollars. And then I went and bought real estate. I bought a little place in Miami and built a house in the Cayman Islands. And I did it so I couldn't trade, because I knew that, over time it should come in my favor. And so I bought the asset. And then I realized that what I'd done is I'd made money because the dollar had gone up against the euro, but the property had gone up versus the dollar. And it's like, oh, fuck, this is what NFTs are. And then suddenly I started realizing, oh my God, it's actually a full ETH nation state. It's not 100% intact, but it kind of makes sense.
No, I agree. We've been strong believers in the idea that like the base layer networks like ETH are sovereign nations. And then, but there is a difference between, say, so like ETH and Sol are pretty similar, I would say, like different cultural makeup, but where, they've got all the components and people use the base currency a lot, right? People price in ETH, people price in Sol. And then I do have a question more for the assets like Atom or Dot, which we also hold, but they're less transactionally used by the constituents of the nation and more, a supply side asset. And so it's one thing that I'm watching, and Atom is working to have interchain security, or Cosmos is working to have Atom serve interchain security and I think be more consumer focused. But I think this is a design decision that people have to pay more attention to. Even if you compare, say, Avalanche and Cosmos in architecture, they're not all that different. But then Avalanche prioritized AVAX within its ecosystem more than Cosmos prioritized Atom. Now, I would say in some ways, or in many ways, Cosmos is like the cypherpunk dream, and it's the most thin pieces loosely joined, and it's had a lot of emergent innovation, and you have some of the strongest engineers and dreamers in all of crypto within Cosmos for that, and so that's a strength. But then I'm very curious to see how the performance of AVAX versus Atom, say, progresses over time, because that's a more pure experiment where you have pretty similar architectures, but with different approaches at the base layer asset. And following this idea of these being nation states, you want as many constituents as possible using the base currency to settle their liabilities.
Yeah, exactly right. And I'm trying to think through some of that stuff, and I don't really know. One thing I wanted to ask you about this as well, because you mentioned Dot. Dot is the one that everybody who kind of was a thinker in the space and an investor loved, and it kind of hasn't done what was expected of it. Is it because it's not a retail use asset? Is it what do you think it is that's not driving large network effect? I mean, it gets used and there's plenty of developers and stuff, but it just doesn't hit that kind of inflection point where it kind of outperforms the market. Why is that?
Right. Well, I mean, it goes to this idea of what I just said of, DOT is not widely used transactionally, and so it's not pricing the goods and services within its network state. It's more of an infrastructure asset that people buy and stake to secure parachains.
So it's like a mobile phone network, because you don't accrete the value of the stuff that's the commerce being conducted on it. Yeah, so i.e. there's less network effects probably.
And so I think that's one thing to investigate. I would say that, I'm sure there are DOT enthusiasts who would just say, you guys are too impatient, and the vision is coming together. And DOT and Cosmos have both been on top of the, interchain vision with different approaches. Polkadot is more prescriptive, certainly, than Cosmos is. And so, it might be that Polkadot is used more by enterprises who want to control their parachain environment, But I totally agree. When the Polkadot white paper came out, it was a seminal white paper that everyone read. And it's still, I think, a top 20 network and I don't think it goes away. But it's important for people to pay attention to the differences in crypto asset design and use, because that is a big one. Like, and that's where I see ETH and Sol as quite similar, and some of the other designs, they made more rational or logical decisions, I would say, but they're less explosive or less exposed to network effects.
Yeah, that's really interesting. That's cleared it up for me, actually, I think. What area, and I don't want you to name stuff because you don't want to move prices and stuff, but what areas are you focused on that think, this is, you're getting yourself set up for the next bull market, you're looking at stuff saying, okay, where are the kind of areas that I want to invest? What are the kind of areas that you're looking at outside of the main stuff we've talked about?
Sure. Well, I mean, I would say that, so my focus has been two-part. In the public markets, it has been buying the distressed important infrastructure of the next expansion. And a lot of this is, on our website, placeholder VC. And it's a lot of the names we've discussed already. I would also add, file storage names to that mix. And so those are things where they're big teams, they're well-financed, they're liquid. It's a little bit like being able to buy, Microsoft and Amazon and those types of names after the .com crash, right? And that's how I look at it. So that was really a lot of time in the back half of last year. And then on the venture side, Placeholder is a very small firm. People don't realize this, but we're 5 people, and wow. We do, I guess, punch above our weight in terms of our staff. But we form a tight thesis. We're very collegial. We work closely with entrepreneurs, but because of our size, we don't do a ton of venture deals, right? I probably do 6 venture deals personally a year, and it's really determined by what is the problem set that I'm currently most interested in? How elegant is the solution? How compelling is the founder or founders? Making sure you're not working with assholes, all those kind of checklist things. And so for me right now, at least at the venture stage, because again, I have all this infrastructure exposure in the public markets, venture stage, I'm drawn more to application stuff. And so it would be things like, we've talked about Tensor recently, which is built on Solana. So it's an NFT exchange built on Solana, really native experience, I would say. It's kind of like you show up and it feels like a TradingView or Bloomberg of NFTs. And that's, 2 founders who bootstrapped the whole thing on their own budget and with hacker prizes. So that would be a good example. Or Vault, which is, vaults are basically programmable environments for artists to launch experiences for their top fans. And so they start with the music industry because the music industry's lost a lot of revenue because the top fans can't interact with artists like they used to be able to. And Vault is trying to create that in a digital environment.
Is that Solana or ETH?
That's also Solana. So Solana and Tensor are both, or Vault and Tensor are both Solana. And I would say this too, we're very valuation sensitive, and valuations within Ethereum are quite expensive. I would say 5 to 10x at the seed to Series A stage, what they were in 18 and 19, whereas the valuations within Solana are where they were in 18 or 19. So, 1/5 the price for similar maturity team. And so I would say that, that's because people don't have the faith that they have in Sol, or they don't have the faith that they have in ETH, they have in Sol. But if you go back to 18, 19, very few people had the faith in ETH, right? And so if I can develop the faith in Sol and then invest in that venture ecosystem, then the
By the way, have you overlaid, I put them both on a log chart, I overlaid the chart of ETH. Actually, it was based on your tweet, I think, and I'd been thinking roughly the same thing. ETH 2018-19 and Sol now, they're pretty much identical.
Yeah. Yeah, and then that would imply...
We're not looking for a perfect pattern match, but contextually, it's bloody close.
Yeah, and then that implies Sol 500 to 1K in the next expansion. Yeah, and so I've been working more at that like user-facing application layer than any other cycle, in part because I desire for crypto to break more into mainstream user bases. And I'm also looking for founders that have a combination of native understanding of the tech, but ability to reach user bases that go beyond the insular group of crypto folks, because we need that. And I think that we're reaching the place of infrastructure maturity where there are teams who can build that experience. So yeah, that's been more of my focus on the venture side. And so it's not relegated to DeFi or NFTs or anything like that. It's more, where do I see people providing a experience for consumers that is, superior to anything else you can find on the market, and with a very credible team that's delivering that experience.
The area that, I've focused on three areas. One is integrating Web3 and realvision. So obviously we've been educating people all the way through, but just fully integrating it. But then I built the asset management business because institutions need to come in and they need a way to do it, because they will come into hedge funds after VC. They always do. But the other part, I co-founded a business called Science Magic Studios. And the thesis there is that culture is now an asset class.
Mm-hmm.
And tokenization is the way to turn the intangible of culture, brand, community into a tangible on the balance sheet. And I always use the example of Disney. What is Disney's brand and culture worth? Probably a couple of $1 trillion. It's not.
Yeah.
It's a lot more than the company's valued. And what's really interesting is those guys are speaking to a lot of big brands, and the cultural, fashion, sports, entertainment, music. They're all looking at it.
Yeah.
And so I think it's going to get driven. What the guys at Meta are doing, Instagram team, and some of the guys at Google and stuff. I think all of these worlds are going to come together in a Cambrian moment at some point, when people, before they know it, are buying, Rihanna NFTs. That is the album cover that comes with their Spotify, because Spotify now is starting to integrate Web3. It feels that all these connecting tissues are about to come together.
I agree. And this is a really big difference between this bear market and all the bear markets prior. I feel like all the bear markets prior, anyone major who was involved, or any incumbent who was involved in any sector, kind of pulled back and was like, ooh, like, let's pretend we didn't do that, and maybe crypto does go to zero. This bear market, they're by and large like, oh, we've seen this story before, and now's our opportunity, and we need to keep doing work here.
Yeah, I've seen that with the financial investors as well. Some didn't have done that. Oh, I don't know. But a lot of them are like, yeah, everybody told us it would be like this.
Or they're still paying attention. Some maybe lost stomach in Q4, but they're still paying attention. And I don't blame them for, Q4 was brutal. Like that was, I think, worse than anything we got in 18 or 19.
I think so too. I think the anger in the space, because everyone was losing money, which never helps, but then everybody's savings getting destroyed by every single player, that anybody who had faith in maybe I can get a yield lost their money, including the trading houses. And then FTX, and then the headlines, and then all the lies. I think that was really hard for people to take. And we haven't seen anything at that scale. But my signal is we've thrown the worst news. Yeah, Mt. Gox was bigger as a percentage back at the day, but we threw the absolute worst news at this. And it just didn't go down as much as the previous bear cycle. It's like,
no, definitely. I know we're probably drawing a close here, and we're not short to medium term traders, but do you have a view on, say, into the end of Q1, into Q2 here?
I'm really bullish. I look at the chart. The chart looks great. Feels like we've just had this nice kind of month-long correction. I'm looking at the ETH, but we can use any of the charts. It feels like, I don't know what it is, but there's one thing that's just going to trigger this. And I then went back and looked at all the other previous, pickups from the low, and then versus stuff like Amazon back in 2003, 4. I look at all of this stuff, and normally it always goes higher and faster than people expect. and then corrects. So, and then we get to the, okay, and let's use ETH prices, but it could be anywhere between two and 3,000. Let's call it that. It could be even higher. I don't know, because there's a lot of mechanics in ETH, which is very lopsided because of the burn. The more people come into the network, the less the ether is around. It's actually, I think it might become a problem for ETH, but it's going to give a lot of upside volatility. But then the question is, okay, there will be a period where the macro needs to be established, and usually crypto corrects for 6 months. And it's either the 2019 correction, which was a big retracement, but at that point, I saw that money supply was actually shrinking again. Okay, maybe it was that. And then you look at the 2015 correction, 15, and it was just a sideways wedge. It was just flat as a pancake.
Yeah, for like
probably
all like 15.
Somewhere between the two, but there is a risk of a V-shape up. That's the risk I think is underpriced. And I was speaking to a friend of mine who's a trader of the options. I'm like, the options in ETH from a medium-term time horizon are wildly underpriced, because people haven't figured out this convexity issue of the more network activity, the less the ETH there is. Just when institutions want to come in, they want to stake it. Staking takes everything off the market. It's like you've got no ETH on the market, and it's burning, and there's more activity. Yes, it's going to push stuff out to the layer twos as well. That's kind of interesting in itself. But ETH pricing could get a little bit unruly to the upside, and options don't have that priced into the term structure.
That's interesting. And you're not worried by, because like it's funny, if you look at the traditional markets, January was full on, and then February people got scared again. But then I look now, it looks like the dollar could be medium term topping. We're bouncing against 4% on the 10-year. S&P's holding 200-day at least today. And, if those things, if the dollar comes back in, if yields come back in a bit, if the S&P holds, then I look at BTC and ETH and they both look like they want to run.
I agree. And then we go back to the other conversation we have. Well, if it runs, if you just zoom out of the ETH BTC chart, that kind of 0.085 level, you break that. Okay, that's, if you put then the monthly log chart of that cross, it's like, holy shit. And then you go to the ETH, the Sol ETH one, that will break at the same time. And you're like, and this is why in my head, I'm like, there is a risk that this just V-shapes because of the difference that this time has versus any other time. And this time has a ton of institutions, hedge funds, retail, who all understand that it goes through a cycle, and they all want to come in. So there is a risk that it goes higher. So yeah, I'm seeing the same thing, and who knows? Let's see how it plays out. Neither of us are that bothered about the timing, if it has another leg lower or not. But it just feels that I think the risk is up. Yeah,
I'm with you. I would then basically expect we either come back to these current levels to base or higher, and it's like 30K BTCs, the base, 2K ETH is the base for the pullback, say mid-year or whatever it might be.
Yeah.
Even, I don't know, Sol 30 or 40. Like there were some levels that we put in for a time there, basically pre-FTX levels. And we're starting, BTC's already cleared that. So yeah, it is interesting. I like that people are getting angry at bullish posts again. That makes me more bullish.
Yeah, they are. People are going for there's another leg lower. And I just think, I really doubt it. I think you missed your chance in June. Listen, my friend, that was a fantastic conversation. Really, really enjoyed it. And,
thank you, Raoul.
I'll definitely get you back and we'll chat some more as we start developing some of these ideas out further as well about
great.
Economies and stuff. But I really appreciate it.
Thank you. Thank you for having me.
I love speaking to people like Chris. He's just thoughtful. He doesn't come at it with, I know. He comes at it, well, this is how I'm thinking about it, trying to struggle, piece together this incredible jigsaw puzzle. What I like is he thinks very similar to me, but he comes at it from different angles as well. And again, doesn't mean we're right or wrong because we have a similar framework, but I just think it's very, very interesting. A big breakthrough from me, and I need to think this through, is how networks that don't have lots of applications layers and more nodes in the network, things like Polkadot, which may be good, may never rise as much as ones that have more component parts of their nation state. I need to think about that point more. I think there's definitely something there. Also interesting to see it on the VC side that Solana have been cheap. And again, I'm not shilling Solana. I just think it's interesting. But to find that there's a lot of applications being built, and my thesis on Solana has been that there's a lot of consumer stuff coming, and he seems to be finding that in the VC space. Mine was more of a hunch, but he sees it. So interesting. Let's see how it plays out. I think we're both pretty bullish, and we'll see.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.